No cap on bonuses. Sky sources say that G20 finance ministers are close to reaching an agreement on the regulation of bank bonuses. But it's understood there will be no limit imposed on the amount paid to individuals. Banks will be forced to disclose the salary details of everyone who earns more than either the chairman or the chief executive. They will also be forced to demonstrate they can claw back up to 100% of the bonuses they pay out in the event that deals fall through. So there's no end to the multi-million-pound bonus culture. But taxpayers will know how many multi-millionaires are employed at a bank. Well, 2 days ago, Britain pledged to look at ways to limit bank bonuses, but it seems that that's now not going to happen.
In restoring the sector, we cannot accept a return to the past ways of governance. Specifically, pay and bonuses cannot reward failure or encourage unacceptable risk-taking. It is offensive to the general public, whose taxpayers' money in different ways has helped many banks from collapsing and is now underpinning their recovery. In the UK, we've put in place a tough code to ensure that, as agreed at the London summit, pay and bonuses reflect actual long-term performance, not short-term speculative gain. Our banks will have to submit their remuneration policy to our Financial Services Authority for approval by October the 1st. As President Sarkozy, Chancellor Merkel and I have said this week, all G countries should develop together and implement consistent rules on bankers' pay, with sanctions at national level for banks that do not play by the rules.
Well, that was the Prime Minister earlier. Our business correspondent Joel Hills is at the Treasury for us this afternoon. Hi, Joel. Explain this for us. They have to be transparent about what bonuses there will be, but there is nothing to say you can't have a £10 million bonus.
Yeah, I mean, the bigger picture here, Lorna, is that obviously finance ministers are meeting and trying to scratch their heads and think about ways in which they can legislate to make sure this financial crisis doesn't happen again. And one of the factors which they largely accept contributed to the financial crisis was the way in which bankers were incentivised. The existing way of bank bonuses, the system is flawed, and there was widespread agreement it needed to change. In terms of what needed to change, that was the detail that really needed thrashing out. And there was a suggestion, Lorna, just 2 days ago. The Prime Minister made an undertaking in a signed letter. He said that he was going to explore ways at imposing some sort of cap or limit either on individual bonuses or on the amount of money a bank was able to pay out in bonus, and look at whether it should be a proportion of profits, whether it should be based on, but certainly to make it more performance related and certainly more accountable. Now that policy seems to have been sidelined. Yesterday the Chancellor suggested that a cap or a limit on pay was unenforceable, that you simply couldn't do that, banks would find a way of rewarding staff. And what we're hearing today is that there has been unanimity finally amongst the G20 members. The French yesterday indicating very strongly that they thought a cap, a limit could work and should work. Their position seems to have changed, and what the final agreement seems to be that absolutely what will happen is that there will not be a limit, but that there will be some form of accountability, this form of clawback, and of course this form whereby banks will be asked to look at precisely what they're paying out and disclose transparently what they pay some of their top earners.
Joel, Gordon Brown, in his speech to the ministers, urging them to carry on spending, essentially. But surely there's domestic pressure on those governments, particularly France and Germany, who are coming out of recession. Things are starting to look better. Isn't there domestic pressure on those governments to start paying back?
Well, certainly that was in the lead up to this conference. This was one of the talking points. If you're a French minister or a German minister or a Japanese minister, you have seen your economy begin to grow again in the last few months. And in that sense, the atmosphere has changed. 5 months ago, there was a pledge made by all the G20 leaders, a fiscal stimulus amounting to some £3 trillion worth of tax cuts. The idea then to stimulate growth. Now, since then, we've seen economies begin to grow again. And yesterday, the IMF revised its forecast for global growth for next year up from 2.5% to 2.9%, suggesting that a recovery is on its way. However, the Chancellor and the UK Treasury believe that a premature tightening of fiscal policy would not be a good idea, because it would risk, if you like, what's been called a double dip, i.e. that growth would not be sustainable and that some countries would dip back into recession. And I think, Laura, that's what's quite interesting about the IMF figures that we saw yesterday. What they show is that although technically, the German economy this year has emerged from recession. What they're projecting for next year is that it may well end up dipping back into recession, that the economy and the recovery that some economies are facing may not be as strong as perhaps some people think, and therefore governments need to keep on spending.
The decisions that need to be made have become clearer. The IMF argue, and Mr Strauss-Kahn is here to say this, fiscal policy should continue to support economic activity until economic recovery has taken hold. For it is clear, in my view, that too early a withdrawal of vital support could undermine the tentative signs of recovery we are now seeing and lead to a further downward lurch in business and consumer confidence, reducing growth and employment and actually worsening government's debt positions over the longer term.
All right, Joe, we'll talk to you again throughout the afternoon, but for now, John Hills, thank you very much.